Warm greetings again to you, our viewers. My name is Japheth Otieno, and welcome to Enwealth Conversation on Enwealth Money TV, where we have great discussions on wealth creation for a better tomorrow. Today, we are concentrating on umbrella retirement benefit schemes, just to dive into the definition, to understand how they are established, and to help you find out how to join one. But we're also looking at what has been developing in that particular space. Of course, as it has been our culture, we always bring to you the best of experts in the industry to address all the questions. So part of the expert today, I'm joined by Hannah Wasioya, the Assistant Manager, Corporate Trustee at Enwealth Financial Services. Hannah Wasioya has industry experience of over 10 years, which gives us the confidence in you. Hannah, let's go straight into this.
Yes.
Umbrella retirement benefit schemes. What are they and how different are they from a normal retirement benefit plan?
Thank you very much, Japheth. So umbrella retirement benefit schemes are simply retirement benefit schemes that have been set up usually by a financial institution to take care of employers who are not in a position to have a standalone scheme. This could be maybe to take care of the cost implications of having one setup for running the same. Also, we have in terms of membership, you'll find that they do not have the technical know-how, as well as they do not even have the time they'd like to concentrate on their core business. So for this case, the financial institution sets up the scheme for them so that they are able to participate and also to enjoy the benefits of economies of scale by pooling together their resources to have them invested and taken care of by financial sound people.
Wow, so financial sound people set up a retirement benefit scheme, then you are able just to join and pull along with them.
Yes.
So what then do the employers who come to join these umbrella retirement benefit schemes stand to benefit?
So the benefits of joining an umbrella fund, for one, it's cost saving because you find that the setup costs are quite heavy, as well as the running costs of the same. We also have that once you join an umbrella fund, given that we have professionals who are running the scheme, you'll get to have a professional experience at a reduced cost as opposed to having it as a standalone. Another benefit will be now exposure to now a better pool of investment resources where you can invest in, as opposed to having a smaller fund size. We also find that now the employer has the benefit of going about their core business without worrying about the retirement of their employees. So they transfer that responsibility to an expert who can run with it.
So let me ask you, Hannah, somebody hears you and is already now convicted with the benefits that are coming with an umbrella retirement benefit scheme.
Yes.
So should they want to join, what are some of the boxes that they want to tick in order to select the best of an umbrella retirement benefit scheme? And after the selection, how then do they join?
One of the things to look out for is now the performance, the past performance in terms of the returns that are offered, because not only do you want to have the money, but you also have to ensure that whatever you saved in your active work life is available, and that is capital preservation. Another thing, you also check that the interest rate that you're being given beats inflation, because you know that the time value of money, a shilling today and a shilling tomorrow, very different. Another thing you check is now how long the company has been in operation. Also, when they are pitching for the business, one of the things they normally tell you is that these are the clients under our portfolio. So you check if these people can have confidence in this company. Also, I can get the same confidence and invest in that. Another thing for you to check is now their compliance, because you see the regulators, like I mentioned, the scheme has to be duly registered by the Retirement Benefits Authority as well as the Kenya Revenue Authority for taxation purposes, because you understand that for retirement benefit schemes, one of the benefits is that they are exempted from taxation to a certain level. So the scheme has to be compliant, and also you have to check the service providers that are giving the various services to them. You have to check who is the actuary, you have to check the auditor, the fund manager, the administrator, and as well as the corporate trustee. So to join an umbrella fund, what you are required is maybe to appreciate and have a look at the trust deed and rules. So the trust deed and rules simply says how the fund is being run, and also if there are any other any other added advantages over and above just saving for retirement. Added advantages could be maybe the last expense or maybe group life for some employees. So once you appreciate the trust deed and rules, you are required to fill what you call a deed of adherence. The deed of adherence simply states your commitment to join the already existing scheme. So for the deed of adherence, what is required is now the contribution rates. You have to specify how much the employee is contributing as well as how much the employer is contributing. You also have to specify the retirement age, because the normal retirement age as recognized by the government is 50 years, but then depending on the nature of work that the employer carries out, there are some who are held on over and above the retirement age. So you call it a normal retirement age, and most of them normally put it at 60 years, but we have a late retirement age which could go maybe to 65, 70, depending on also how the employer is skilled and their services, how they are required in the organization. So we also have to specify whether the fund is meant to be a pension fund or a provident fund. So for a pension fund simply means that at retirement, you get to have a third of the amount paid to you as a lump sum, and you have to commit the remaining 2/3 to either an annuity or an income drawdown arrangement. So in the event that maybe you find that the amount that you're going to get as a drawdown or an annuity is below the minimum wage, you are now, we call that a trivial pension. So in that case, you'll be required to take the whole amount as a lump sum.
So thank you very much, Hannah, for that. I know you've been in this space for some time.
Yes.
What are some of the legislation changes that have really hit the industry, and it's a conversation that is actually happening, today?
So one of the changes that has affected this industry is now the NSSF Act of 2013. You find that initially we used to contribute 400 Kenya shillings towards retirement through the NSSF. So 200 from myself and 200 from my employer. But now as it stands, I'm meant to contribute 6%. The employer matches another 6%, which makes 12%. So I think that is one of the things that I can say has greatly affected, seeing that people will have more deductions and also employers will be mandated to contribute more towards a member's retirement.
Yeah, thank you. So which of course speaks into, larger savings towards retirement. So how does this one then affect the umbrella retirement benefit schemes?
So one of the things that I'd mention is in terms of now the contribution rates, because as I mentioned, in the deed of adherence, the employer is meant to specify the contribution rate that they're deducting from the employer and matching the same. So you'll find that there are some schemes that had listed maybe 3%, 5%, but now they'll have to up it to 6%. So with this, you'll find that now the fund managers have more money to invest, which simply means that they're going to give better returns. You also find that now for the employee, a benefit to themselves, because no one wants to be deducted extra money, but if they are meant to understand that this extra money actually goes to their benefit to up their income replacement ratio at retirement, it's a conversation that they're willing to listen to. So additionally, you find that the NSSF Act of 2013 has given a leeway where employers who are in a registered benefit scheme have an option of opting out their Tier 2 contributions and having it remitted into their already existing schemes. So you see, if you're not in a registered retirement benefit scheme, you have to contribute that money to NSSF. In the event that you're not in a retired benefit scheme, you have the option of applying to join an umbrella scheme, and in that case, the Tier 2 contributions can now be transferred to the scheme, which will now allow you to also opt out as the counterparts who are already in a registered benefit scheme. Yes.
Wow, thank you very much, Hannah Wasioya. That is Hannah Wasioya, the Assistant Manager, Corporate Trustee, just responding to all our questions concerning the Umbrella Retirement Benefit Scheme. And we hope you, as our viewer, you have gotten a grasp of what Umbrella Retirement Benefit Schemes actually are, how to join, and what you stand to benefit. Should you have any questions, feel free to drop them at the chat box, or you can directly call us through our contacts or email us directly. Should you want to join, we're available to partner with you to help you join one in your journey towards better tomorrow. So remember to subscribe to our channel to get more information. Engage us on other social media platforms, and remember to share this with many more to benefit from the information. See you in the next episode.